Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because we just had another solid week for Bitcoin with global liquidity still rising week after week. And I think it's safe to say this is a very clear global liquidity uptrend, just like the past three we've seen so far this cycle. And each and every time we've seen one of those uptrends, Bitcoin followed within 75 days. And if that pattern were to continue, we'd expect Bitcoin's next rally to start by late March within 1 to 2 weeks. And this steep uptrend in global liquidity has been driven by the aggressive downtrend we've seen in the US dollar index. And the US dollar is devaluing compared to other currencies globally because of the increase in Fed rate cuts that we've seen priced in for 2025. When this year first started, the market was only pricing in one rate cut for the entirety of this year. But as we've seen inflation break below the range it's been trading in since July 2024 on the Fed's preferred measure of CPI, core CPI, and also the weakness we've seen in the labor market recently, especially with the federal layoffs we've seen announced over the past few weeks, combined with the weakness we've seen in the stock market and the aggressive sell-off we've seen in the S&P 500, it's not surprising that the market is slowly increasing rate cut expectations and pricing in more rate cuts for 2025. And we know that more rate cuts being priced in and global liquidity increasing is good for Bitcoin, but sentiment is still in the gutter, and this is still the worst sentiment we've seen so far this cycle. And it's amazing how different sentiment is today compared to just 3 months ago when everybody was talking about the golden age of crypto and a Bitcoin super cycle when it was trading above 100,000. And we talked all about this in the free weekly report that I released on Monday titled Extreme Fear, and I always link these in the description below. But it's not surprising we're seeing this much fear right now with all of these tariff headlines that we're seeing day in and day out. First, Trump announces tariffs on Canada and Mexico, and then they announce tariffs in retaliation, and then we're forced to retaliate to their retaliatory tariffs. And the same thing is happening with Europe, who's now retaliating to our retaliation against their original tariffs. Same thing happening with China and other countries as well. And all of this headline fatigue and uncertainty is really impacting investors in the short term, and it's really carrying over into Bitcoin. Bitcoin does not tend to perform well when there's a lot of macro uncertainty and a sell-off in the S&P 500. And so far, this time hasn't been any different. But I do find it impressive that Bitcoin has actually been putting in higher lows over the past week, while the S&P 500 was putting in lower lows. So when we do see the S&P 500 stabilize and bounce, I would expect Bitcoin to perform very well during that S&P 500 recovery because of that relative strength we've seen from Bitcoin recently. But it is obvious that all of this macro uncertainty is impacting Bitcoin demand in the short term. We are now at the lowest levels so far in 2025, and we see that very clearly in the ETF inflows. We've been seeing not much in terms of inflows over the past few weeks, especially when compared to what we saw in late 2024 and early 2025. So we need some type of catalyst or recovery in traditional markets to bring that demand and excitement back to Bitcoin. But although sentiment is still terrible right now, I am still optimistic that the best is still ahead of us because Bitcoin is still holding its major support areas, and all we have to do is not get caught up in the chop and emotions in the short term while Bitcoin consolidates. Bitcoin is still holding our major support level, and we'll see how it reacts to 90K once it retests it from the downside. We really want to see Bitcoin reclaim it and not get rejected on the underside of that crucial level. But any price action between 80K and 90K is really just consolidation and short-term noise, kind of like what we saw in Q3 of last year, kind of like what we saw in Q3 of 2023, and kind of like what we saw in the summer of 2021, where there's a huge sell-off, ton of chop that makes everybody give up hope, and then a recovery, huge sell-off, tons of chop, recovery, huge sell-off, tons of chop, recovery. Are we seeing something like that again? That's my base case, but as of right now, we will wait and see what Bitcoin decides to do and how this is going to play out. The good news is that we did come down and fill the CME gap that we left during the Trump rally in November, and this is something Bitcoin does very often. It's a very aggressive and steep rally, forcing everybody to FOMO in. Then you see a retrace before Bitcoin continues higher. Steep rally, retrace, continue higher. Steep rally, retrace, continue higher. Steep rally, retrace, continue higher, and then steep rally, retrace, continue higher. And a lot of times those retraces tend to coincide with gap fills like we saw in March of 2023, like we saw in January of 2024, like we saw in August of 2024 as well. And here we are in March 2025, seeing a deep retrace, filling a CME gap, and then hopefully bouncing like we saw the past 3 times we left a CME gap in this bull market. It is also nice to see that Bitcoin is still holding above our March swing high, so we are still maintaining our macro higher high and higher low structure on the larger time frames. So for now, my base case remains that this is just a normal Bitcoin bull market retracement, and the fact that we're bouncing off of the golden pocket, which is the area between the 0.5 Fibonacci level and the 618 Fibonacci level, further solidifies that. In case those numbers seem random, guess where Bitcoin found its bottom on the past correction during the August 5 low? It was in the golden pocket as well, and the correction before that from the banking crisis to the swing high of July 2023, we bottomed in the golden retracement as well, and even the FTX low up until our swing high right before the banking crisis, Bitcoin corrected down to the golden pocket there as well. So for me, I like to keep things very simple. If we lose this 50-week moving average, we'll have to entertain the fact that this cycle is over and the top, at least in the medium term, is behind us. If Bitcoin spends a couple of weeks consolidating in this area and really builds out another base like it did in August of last year, or like it did in the summer of 2023 or the summer of 2021, we can talk about a normal prolonged cycle. But if we see a catalyst that gives Bitcoin a quick recovery and we reclaim 90K immediately, then I think we enter the finale and a major blow off top move for Bitcoin early in the year. And this is exactly why my portfolio is set up the way it is. The decent sized cash position is to protect me in case we do lose the 50-week moving average and the cycle is over. The decent sized altcoin position is to take advantage of an immediate blow off top in case we do see that sentiment and global liquidity combo play out once again. And then my portfolio still has quite a bit of Bitcoin in case we do see prolonged chop and prolonged consolidation, and we go into a more prolonged bull market and Bitcoin blow off top. And the first module of my portfolio management system did get released this week in the Crypto and Macro Enjoyers program, so you can check that out with early bird pricing if you're still interested. But as of right now, I'm not tempted to make any huge changes to my portfolio because Bitcoin is still sitting in the middle of our fair value range, and I'm quite happy with my current allocations. But Ethereum has been a very tough allocation to navigate this cycle. It continues to struggle. As of right now, it's trading right around our previous range high and our around $2,000 price level. We really don't want to see it start closing too many weekly candles below this area. We want to see a quick reclaim sometime soon. Of course, a lot of that is going to be driven by Bitcoin. And if you're feeling bad about your Ethereum holdings and how much you've lost on Ethereum, just know that it could be a lot worse, because this week a crypto whale was liquidated for a $308 million leveraged Ethereum trade. And by comparison, my Ethereum position all of a sudden feels a lot less painful, especially because we are now sitting at 5-year lows for Ethereum when priced against Bitcoin. We are near the lows that we were at in December of 2020. And so far, we've seen these hype cycles for Ethereum against Bitcoin, where in 2017, everybody was piling into Ethereum to buy ICOs. In the previous bull market, it was DeFi and NFTs. But as of right now, Ethereum just doesn't have that major narrative or that major catalyst to make everybody want to use the chain. But I'm optimistic that with this new regulatory clarity and framework, we'll see stablecoin adoption and other innovation that can bring some life back to these smart contract platforms. It doesn't help that Solana has also been taking a lot of Ethereum's market share. I like this weekly candle as of right now with a clean deviation below our range low and trading below the liquidity of all of the lows we have here, just like we did a deviation above our previous all-time high from November of 2024 and even the all-time high going back to November of 2021. So we wrecked all of the short positions when Trump launched his meme coins, got a lot of people to FOMO in at the peak, huge aggressive sell-off, and now we've liquidated just about every long position. So I'm hoping that Solana finds a bottom in this region somewhere around its 100 or 200 week moving averages. And we do have an interesting catalyst for Solana this week. It is getting its CME futures on the 17th, I believe, and this is usually the final step before getting a spot ETF, so that could be a great catalyst for Solana. It's also at an interesting area on its Bitcoin pair. We ran the lows from 2 weeks ago and are now trying to close above. It does look good for a bounce here, but I'm still open to a retest of our December 2023 lows before we finally get that break higher against Bitcoin. But for now, all we can do is wait and see how the next few weeks of price action play out. I am still bullish on Ethereum and Solana in the longer term because I'm expecting a lot of stablecoin adoption over the next few years, especially with the regulatory clarity we're getting with stablecoins in the United States. We're seeing a ton of demand globally for stablecoins as a store of value for countries that don't have that strong of a currency. And believe it or not, USDC actually accounted for Latin America's biggest share of crypto purchases on the major local exchange Bitso in 2024. Now for us, that sounds crazy because we want to buy things like Bitcoin to protect us from dollar inflation, but in countries with higher inflation rates than the US, they're very happy with dollar exposure because their buying power increases in their native currency as it weakens against the dollar. So short-term price action is going to be driven by what Bitcoin decides to do, reclaim 90K and the party is on, lose 70K and I'll be quite concerned. Anything in between is just noise and chop while we try to find some macro clarity and try to find a bottom for the S&P 500. But in the long term, the federal government is still running these huge deficits. We just got an update to the fiscal year of 2025, now officially above a $1 trillion deficit, and we're 38% ahead of where we were last year at this same point. And here we are watching this trend worsen with larger and larger deficits. And we know that all of this national debt has to get monetized eventually, which debases the currency and increases the money supply. And that makes me bullish on risk assets like the S&P 500 in the long term because we price it in these devaluing dollars. And it makes me bullish on fixed supply assets like Bitcoin as well. But as always, let me know what you expect. Are things different this time with global liquidity? Or are we going to watch Bitcoin follow in its footsteps with a lag, just like we did the past 3 times we saw this type of global liquidity uptrend? And as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.